Ford Figo for 7 days and now he won't let go.
Whoa, it's got the sporty looks, comfort, huge fence sitting in the back comfortably. It's spacious. Mileage is incredible.
Hi Sanjeev.
It's a Bluetooth feature in my new car. It's got convenience written all over. I can't even think of going back to my old car. Amazing. It's so powerful. I feel like Superman.
Want a bag? Bag.
Oh, stop teasing me, man.
More color, more style. Vayu. Sunny.
Hello and welcome to the debut show of earnings call, the Q2 preview, wherein we get in two experts to talk about what the quarter ahead could look like, both in terms of the top positives, the top disappointments, and what you as an investor should watch out for after the numbers come out. Okay, before I get into what we are going to do on the show, let me quickly introduce the two gentlemen who are joining us on the show. From the buy side, one who invests the money, Vikram Kotak, needs no introduction. He joins us to give us his sense of how the quarter could shape up. And from the sell side, we have Bharat Iyer of JP Morgan to give us a sense of what the intricacies of this earnings season could be like. Gentlemen, thanks so much for joining in this time around. Vikram, start off with you. The backdrop to this quarter seems a bit muted because you've had interest rate hikes that have continued. The currency has behaved in a very unnatural fashion, and quite alarmingly so, in a very swift manner as well. So there are a few headwinds as corporate India gets ready to declare its numbers.
I think, you're right, Niraj, that this quarter has been, possibly to my view, is one of the worst quarter for the fund managers because I had not seen this quarter for the last 4.5 years. As you rightly said, there's a currency 10% tailwind which is going to impact a lot of companies. There's interest rate hike of 75 basis points in the last 3-4 months. Also, commodity has been rising in past and the lot of inventories are built, so a lot of commodity price pressure also going to come into this one. And plus you have the global and the local macro headwinds which is actually impacting this moderation of the growth. So you'll see one of the toughest quarter for the corporate India this time around.
Bharat, you kind of concur to that because the street seems to be working with assumptions of maybe around a 10 to 12% top line growth, pretty much, or in fact slightly more than that in terms of top line, but the bottom line could be muted because almost all the sectors have faced some tremendous margin pressures, not to forget the fact that the interest costs are obviously going to be higher.
Yeah, you're absolutely right, Niraj. In fact, if I look at our own numbers, while we expect the top line will grow at about 20%, for the BSE Sensex, we expect that earnings growth will just come in at about 10%. And this is despite a very significant contribution from Coal India. So if I were to look at the numbers ex energy, we are calling for earnings growth of only 4%, which should make it one of the weakest quarters we've seen in a long, long time.
Let's start off with the disappointments really, because there are a lot of disappointments, Vikram, this time around. Even if you go just by the alphabetical order, autos and the kind of impact that these companies would have, but for the two-wheelers, the volume growth has been a bit sluggish, not to forget the fact that the margins will be under pressure and interest costs anyways being there.
I think auto you have to divide in two parts. One is the clearly two-wheelers and the HCV, where the growth has been good in the last quarter. There's 17% growth in the volume terms in two-wheelers and 20% growth in the HCV. But on the other side, four-wheelers, as you mentioned, four-wheelers and the MSCV actually has seen a less than 5% growth in the last one quarter because the some capacities were constraints and some strikes and all that. Also, there are two parts within that. One is the exporters, where you have the exporter or we have the global balance sheet. They'll be benefited because there is a currency depreciation because large exports and if they're not hedged completely, so there'll be a big benefit flowing around there. On the other side, there are importers, there are cross-currency issues, there are royalty payments. So I think some of the companies will be impacted by that. So net-net, you have to break up that in two parts. Two-wheelers, top line 20%, bottom line maybe in the range of 10 to 14%. HCV will not have a good bottom line because of commodity prices, but good top line on the other side. Cars, four-wheelers, particularly in MSCV, will have around 4 to 6% top line, but that could be muted or maybe a negative bottom line there.
Bharat, we'll go into intricacies in a bit, but two-wheelers, you think, have the potential to maybe outperform compared to the four-wheelers and the HCVs?
I think they have been outperforming, and rightly so, because it's a very resilient segment of the auto sector, particularly given the...
Now, in terms of numbers this quarter around?
In terms of numbers, yes. I mean, I would think that that's one segment where you've seen reasonable volume growth, and even accounting for margin pressures, I would agree with Vikram that we're probably likely to get between 5 and 10% earnings growth. Whereas in the case of the four-wheelers, particularly the passenger cars, we've once seen volumes decline substantially and add to that margin pressure, and I think you're going to have a very sorry picture there.
You would be particularly disappointed by what maybe a Maruti and a Tata Motors would do. Maruti, of course, also because of the strike problems that they've had.
I think Maruti's had multiple problems over this quarter. Sales has been weak, accentuated by the strike, and I think there will be margin pressure. So probably we are looking at earnings declining by about 25% or thereabouts. In the case of Tata Motors, we're calling for more a flattish kind of performance. And anyway, in the case of Tata Motors, what's increasingly coming to the fore is the overseas operation.
Sure.
I mean, that's more than 80% of the overall business right now. So the domestic business is getting dwarfed in that sense.
Vikram, the other disappointment this time around, and everybody's pricing it in, is capital goods and infrastructure. I mean, what, say, maybe an L&T or a Crompton gave last time around as an individual picture was something completely different, but this time around, interest costs being high, order inflow looking a bit sluggish. You would be wary of the spaces?
I think you to look at when you open the capital goods chapter, and as you said about some disappointment already in the Q1. I think you look at the market is ready to only want to look at the order intake, order inflow, how the orders are going to come in, and which is not likely because you've seen a muted quarter, you've seen the slow on the reforms, you're not seeing the approvals coming in, you're not seeing the capex is starting because business sentiment is very, very poor because policy reforms are not happening. So net, there's nothing extraordinary going to come in this quarter in terms of the order inflow. Even the global order flows have been kind of muted. So net, we don't see anything happening there. So market will be worried about that, despite we have a 2 years of order book for most of the companies. So FY12, FY13 or even mid of the FY14 can be easily executable. But market will actually look at this number very carefully rather than looking at the quarterly earning, because your valuations are in place. Valuations have fallen dramatically. The most stocks have seen 30 to 40% correction in last 6 months. So in my view, valuations are very good, but I'll rather play on a order intake and order inflow, how orders are going to come, which is not likely in this quarter, as you mentioned.
Which will be important as well, Bharat, the commentary that comes in. But purely in terms of earnings display this quarter, can we expect another howler for many of the companies? I mean, Crompton did that last time around. We don't expect too much of positives from the infrastructure companies either, but cap goods in particular.
Well, as far as cap goods is concerned, I think, Vikram's right in the sense that, first of all, this is seasonally a very weak quarter because this is the quarter where the monsoon impacts activity the most. So, I don't think you're expecting too much anyway. At the sectoral level, if you're just looking at capital goods and, keeping infrastructure aside for a minute, we'd be looking at earnings growth of about 8 to 10%. And, I don't see too much volatility there because, you could have the odd execution issue there. But otherwise, people are largely, taking orders from their order book and, just executing right now, and it's a weak quarter. So I wouldn't expect any major howlers there. And, the one-offs that were there, I think are already, part of the trend right now.
Even for the bellwether L&T?
As far as L&T is concerned, again, I don't think we're looking for very significant numbers for this quarter. I mean, if I look at my numbers, I think we're looking at about 5-6% growth. Okay. So we're not looking at very significant performance for this quarter. But I think Vikram is very right. I think what the street's going to focus substantially on is the commentary that comes with it in terms of the order flow. And even if the orders are not in place, in terms of how managements perceive the environment.
Sure. Okay. We hope for no howlers coming in from companies like Crompton as well. So the belief is, however, that they would continue to post a negative picture this time around as well. So some downtick that will come in from Crompton stable as well. Gentlemen, stay on with us. Let's take a quick break. We come back, talk about some positives, talk about one important factor this quarter around, and that is currency, and that is pretty much having an aura of its own this time around. Forget the positives and the negatives. The currency picture will be extremely important. We'll discuss that in greater detail with both our experts. Stay tuned.
कहाँ जाना है आपको?
आप ही के घर चोरी करने। हम चोर हैं। आगे से लेफ्ट ले लीजिए सर, शॉर्टकट है। अरे आप भी आइए ना, आप ही का घर है।
क्या मुसीबत कभी इस तरह आएगी? नहीं ना, इसलिए अपनाइए गोदरेज के हाईटेक सिक्योरिटी सॉल्यूशंस।
Two options now. Option 1, you could rearrange his face. Or option 2.
तू बजा तो बहुत अच्छा लेता है. गाता भी है क्या?
And when you choose option 2, you become a Verito man.
Even after all these years, the distance remains 22 yards. It's the same challenge that helps Toshiba innovate. Even 26 years after making the world's first laptop.
Are you ready for more?
Toshiba.
All right, welcome back to the special preview of earnings call for the Q2. With me are Vikram, Kotak and Bharat Iyer. Gentlemen, talk about a few sectors which may actually show a bit of a positive trend. And, to start off, we're actually talking about two sectors which will be impacted in quite a fashion by the currency movement. Telecom firstly, Bharat. In fact, Vikram, let me start with you. Telecom. The overall growth in the numbers may not be completely evident because the price hike impact would probably come in only for 1 month or 1.5 months. Right. But how do you expect the quarter to shape up?
See, telecom again, the story will be like capital goods. You have to focus on only one area, which is RPM. How RPM is really going to move, and it is going to be very strong to my view, and it's going to, as you rightly said, will see a much more stronger movement going forward. Why RPM will remain strong? One is clearly the tariff hike, and second, we are seeing the consolidation, the competition. That's the other thing which is happening. So we'll see that RPM will be, a key area to watch. It's going to be seasonally a little bit of kind of sluggish quarter. We've seen the numbers are not adding so well because now your rural base has actually gone up. So what happened? That rural base has gone up, and they are more seasonal. So that's why you'll not see the numbers coming so well. But going forward, you will see very big traction in the telecom numbers. So this is RPM. So your EBITDA growth will look very stronger. Below EBITDA, you will have the depreciation because of the large 3G money which they have paid. There's interest cost. There's a FX burden of some of the companies. There are companies that become global, so they'll have their own MTM issues. So, but on the bottom line, it may not look good. But on the RPM side, it's going to be one of the strongest quarter.
EBITDA, Bharat. Consensus is that it could be very close to the double-digit growth this time around. Yes. But, just shape it up for us. Forget in Reliance Communication because that's maybe a bit difficult to lay out pure numbers into. In case of Bharti Idea, for example, while EBITDA growth may be strong, there are concerns over how the bottom line performance this quarter would be.
Yeah, it's I guess going to be a story of two halves in that sense. Whereas at the EBITDA level, you could almost reach double-digit in terms of earnings. Don't be surprised if net earnings are actually negative.
For Bharti in particular?
And reasonably negative. Basically because, you have the capital costs associated with the 3G rollout, as well as, you have to look at how they account for the depreciation of the rupee, because companies do have significant FX liabilities. And in the case of Bharti, also because of the overseas acquisition. So it's going to be a very distinct picture. But if you ask me, I think the street's going to focus on the operating metrics rather than just the financial part of it, because I think, that's what's going to drive valuations.
Okay, so maybe the reported numbers won't have too much of an impact on how the street views the stock.
I think the street will look at the fine print and at the operating stats.
Okay, great. Bharat, and a follow-up to you on what happens to IT, because, separating the wheat from the chaff, most people are saying that companies like HCL Tech, for example, might have a positive impact because of the fact that they are not too hedged. As opposed to a TCS, which is quite hedged for Q2.
Yes.
And while they may show a very strong commentary in terms of how the business performs, the below the operating line items could actually spoil the turf this time around for TCS. You think so?
Not necessarily. I think if we look at TCS, we're still looking at a YOY growth of about nearly 13% for this quarter. Sequentially probably it's probably going to be more like 1 to 2% because of some of the variables that you mentioned. But that said, again, even in the case of the IT services sector, if you ask me, I think the street's going to focus a lot on management commentary because we've seen a very meaningful deterioration in the global macro over the last quarter. Since most of the managements gave out their guidance during the first quarter. So it's going to be very, very important to see the body language and the kind of commentary that accompanies the results. And, if guidance is being increased or, don't be surprised if guidance is cut marginally. So I guess, that's going to be very, very important. So again, an area where don't just focus on the result, but focus on the commentary for the future.
Vikram, and what do you think people will look at? I mean, would it be the first company that comes out, the bellwether, and people kind of assume it, paint the entire IT sector with the same brush, or you would wait till the end of the earnings season?
I think after the correction of 25-30% in the sector, I think sector is looking much more reasonable than completely, heavyweight defensive. It's going to be not impacted by anything. And as Bharat very rightly said, that the macro headwinds, the global headwinds around Europe and the BFSI, particularly globally, has been very important to watch around, and management commentary and management guidance will be so important to focus around than the numbers, because numbers side you can see 20% top line growth and a 13-14% bottom line growth from large cap companies. But I think I'll rather focus on the management commentary guidance and what's things panning out in the Europe and BFSI segment. Also, one thing we need to keep in mind for the IT companies that they have a lot of levers inside around to kind of manage their efficiency utilization levels. So that area, I think they can surprise over a period of time, and maybe in this quarter also for a few companies. So net I'll try to kind of focus around on the, what commentary they bring it and how the macro pans out, particularly in Europe and the BFSI across the globe.
Just before the preview, Bharat, one word answer. Your top stock to watch out for in terms of earnings delivery?
I'd say TCS and HCL Technologies. Those